Hello my fellow investors and welcome back to another stock analysis video. Today guys, let's take a look at the company that was recommended by none other than a really well-known person here on the channel. She comments a lot. She's like one of the top 3 people that comment a lot, so shout out to you. And then also something else too, you donated $20 on the last live stream that we did and I never gave you full credit, so shout out to none other than KLL, who recommended the company Cube. So again, thank you so much for the recommendation as well as the donation for the $20 on the last live stream. And for everybody to note, on Tuesday we will have another live stream where we're going to cover the CPI for the month of February. So if you guys want to tune in for that, it'll be at around like 7 p.m. Eastern Standard Time. All right, but nonetheless, guys, let's take a look at the company Cube, which is brought up by KLL. And let's see if at the current share price, this is looking like a buy. So with that said, let's get started with this analysis. So guys, let's get started with knowing what in the world this company does, because to my surprise, I did not realize that this was a specialized REIT. Did not realize that this was a REIT company. So we got over here, CubeSmart is a self-administrative and self-managed real estate investment trust. The company's self-storage properties are designed to offer affordable, easily accessible and secure storage space for residential and commercial customers. According to the 2020 Self-Storage Almanac, CubeSmart is one of the top 3 owners and operators of self-storage properties in the United States. And right then and there, I am already falling in love with this company because of its simplicity. If there's one thing, guys, that when it comes to investing that I really do like is simplicity. You know what companies like, for example, Domino's does, right? They make pizza. Companies that are very simple when it comes to their business model usually tend to succeed because, well, it's simple. Right? It's simple. You could think about like things like a company, for example, like Intel, about all these crazy chips, of like everything that they do, all these awesome things that they do. Yet at the end of the day, a company like, for example, Starbucks, Domino's, will always tend to do a lot better just because of the fact that they're very simple. And by the looks of it, this one is in that kind of bracket as well. So right then and there, I'm already liking this company, not gonna lie. So with that said, guys, let's come into now their earnings, because their earnings were actually just a few days ago. It was on February 23rd, and their FFO normalized actual came in at 36 cents, beat by 6 cents. EPS gap actual, 36 cents, beat by 6 cents. Revenue actual, $261 million, which is a beat by $508.25 thousand. So now let's come into their actual earnings report, because it was that short ago, so I really would like to cover their earnings as well. And of course, this is for KLL. I'm going to, even though like the earnings report was a little bit ago, I still think that you deserve, for me to go over the earnings, because you have been so awesome when it comes to just supporting the channel. But nonetheless, guys, we come over here to the actual earnings report, and like always, this will be linked in the description below if you guys would like to read it for yourselves, and I highly recommend you read this for yourselves. So let's get on with this. We got over here, quote, "We ended another great year of extraordinary growth, showcasing the strength of our operating platform to maximize cash flows," commented President and Chief Executive Officer Christopher P. Maher. "We are reaping the benefits of our efficiency initiatives as we manage our expense growth in the face of inflationary pressures. We continue to see good demand for the product, and our platform is well positioned to drive growth throughout 2023. And that's pretty much it. So nice and sweet, short, awesome. Love to see it. The CEO, again, this is the first time I've ever checked out this company, but the CEO does seem pretty, I guess, bullish about this. Let's come into now the key highlights. Reported earnings per share EPS attributable to the company's common shareholders of 36 cents. Reported funds from operations FFO, which, remember guys, the FFO is essentially like a REIT EPS kind of. So their FFO came in as adjusted of 67 cents. So the AFFO came in at 67 cents. Increased same store, 521 stores net operating income, 12.1% year over year, driven by 9% revenue growth and a 2.3 increase in property operating expenses. Guys, increased same store 500. Wow, that's insane. That's actually really good. 12% year over year. That's absolutely insane. Average same-store occupancy 92.8% during the quarter and ended the quarter at 92.1%. Amended and restated our unsecured revolving credit facility, increasing the size from $750 million to $850 million, improving the pricing and extending the maturity date to February 15, 2027. I'm not fully sure what that means. So if one of you guys, KL, maybe you could tell me exactly what that means. I'm not fully sure. But maybe it had to do with like, you can only keep your stuff at the facility up until like a certain date, but then they increased it to like now February 15, 2027. I think that's what that means. Increase the quarterly dividend of 14% to an annualized rate of $1.96 per common share from the previous annualized rate of $1.72 per common share. That is absolutely insane, guys. A 14% increase if you own this company on this dividend. Added 28 stores to our third-party management platform during the quarter, bringing our total third-party management count to 668. They have a lot. Wow, this is actually kind of interesting. Now, when it comes to the financial results, we got net income attributable to the company's common shareholders was $81.9 million for the fourth quarter compared to 45. Wow, that is a massive increase. That is a massive increase. Going from 45.3 million to 82 million? That's insane. Net income attributable to company shareholders per the year. Okay, so this is for the year. It was $291.3 million compared to 223.5. Wow, that's crazy. FFO as adjusted was 152.3 million for the fourth quarter, which was before 126, so a little less than double, which is really, really good to see. And when it came to the year, it was 574.5 million compared to 448.6 million dollars. Guys, that is awesome. It's really, really awesome. Now, let's come over here into their guidance right over here. 2023 financial outlook. Quote, our balance sheet is well positioned to take advantage of external growth opportunities that present themselves as clarity returns to the transaction market, commented Chief Financial Officer Tim Martin. Our initial 2023 guidance range reflects expectations of a solid fundamental backdrop coupled with more normalized operating trends. That, I don't know how true that's going to end up being because, I mean, of everything that's been happening recently. And again, it's just absolutely insane. The company estimates that its fully diluted earnings per share for the year will be between $1.76 to $1.83, and its fully diluted FFO per share as adjusted for 2023 will be between $2.64 to $2.71. Due to the uncertainty related to the timing and terms of transactions, the impact of any potential future speculative investment activity is excluded. So they're pretty much just saying that, like, because there's so much uncertainty, we're just going to take these off of our guidance. I don't know how I feel about that, honestly. For 2023, the same store pool will consist 594 properties totaling 42.6 million rentable square feet. All right, all of that's really cool. Over here, we got some of the correlations between, previous year to the current year, but we already kind of went through that when we went through these financial results. So now with that, let's come into the calculator. Now we got the ticker symbol for CUBE, Cube, market cap of $10.25 billion, a current share price of $45.62. Now, taking a look at this share price, guys, on the 1 year, they're down 7.67%. Year to date, they're up almost 16%. 52-week range is $36.82 to essentially $55. We're pretty much smack in the middle when it comes to this. Now, as of Friday close, I mean, everything was down, and it was down mainly because of the whole Silicon Valley Bank situation, which, by the way, I will cover that for tomorrow's video. A little bit more in depth of what I've covered before. But nonetheless, guys, everything was down. And, well, you can see this company was down 2.35% as of close of March 10th. Now, it's still with that, though. We are still halfway in between the 52-week range. So that could be good or it could be bad. I don't know. We'll see how the price divided by FFO will be looking like. Now, coming over here to the actual funds from operations and adjusted funds from operations. Now, here's the thing when it comes to this. Well, Seeking Alpha doesn't actually have any of the previous numbers past, I believe, 2021. So anything from 2020 and including 2020 and further back, unfortunately, Seeking Alpha doesn't have it. Luckily for you guys, they do have it. It's just that, or at least the company has it, but you just have to go into their actual annual reports to actually get it. And I did go through all of them and I put them all in here. So do not worry, I did the hard part for you guys. Nonetheless though, if you want, you could still take a look at all these numbers. You just have to go into the past annual reports and just, find them. But nonetheless, I still found them and I input them all here. So that way you guys can see the exact FFO and AFFO as they have increased or decreased within the past 5 years. So when it comes to the FFO as of 2022, it was $562.7 million and the AFFO was $574.5 million. Now, they do pay out a dividend of $1.96, which they did mention in their earnings report. And this ends up being a yield, guys, of, wow, a whopping 4.3%, a payout ratio of 138%. But again, this is a REIT company, so it's understandable as to why this is this high. A 5-year CAGR of almost 10%, 12 consecutive years of dividend payment. Ex-dividend date is actually coming up on the 31st of March. Payout date will be on April 17th, and they pay their dividends quarterly. Now, based off of the current shares outstanding, and of course remember that REITs do tend to issue shares, this means that they pay out $440.22 million every single year in dividends. And in regards to the FFO and the AFFO, the payout ratios ends up being 78.23 and 76.63%. accordingly. Again, remember, this is a REIT, so these payout ratios are okay if they are significantly higher because, again, REITs follow a different regulation as opposed to other normal companies. Also to mention, when it comes to this dividend, and we'll mention this later when we cover how much you will get for this dividend, please remember that when it comes to REITs, you are not going to get the tax benefits as a normal company, because REITs are mandated by law to give out minimum 90% of their revenues in the form of a dividend. You will not get the same tax bracket as a normal company, like for example an Apple would give you in regards to its dividend. Essentially, guys, you will be taxed at the normal tax rate for REIT dividends, so please keep that in mind. So now let's come into their fundamentals, starting with the net income 5 years ago of $164 million to today of $291.3 million, increase of 78%. Now, we could see that they were going up, and then COVID hit. They took down a small dip, going from 169.1 million to 165.6 million. Guys, that dip is nothing. It was COVID related. I'm essentially going to ignore it. However, though, we do see a pretty big increase from 2 to 1 year ago, going from 223.5 to 291.3. For this reason, I'm going to give this guys an 85%. Looking at the FFO, and again, remember, Seeking Alpha does not have this. You really have to go into their earnings report to find it. But when it comes to their FFO, guys, it was $306 million to $562.7 million, increase of 84% with an average of $414.83 million. Once again, we do see that small dip from 4 to 3 years ago, and then a pretty big jump from pretty much 2 years ago to 1 year ago. So for this reason, I'm going to give this an 80%. Looking at the AFFO, it pretty much follows the FFO, just the numbers could either be a little bit higher or a little bit lower. Nonetheless, though, once again, a nice steady increase going from 307.8 million to 574.5 million, increase of 87% with an average of $428.5 million. Now, we see a nice steady increase, though the jump from 3 to 2 years ago was a bit much for me, as well as the jump from 2 to 1 year ago. So for this reason, I'm going to give this another 80%. Overall, though, it's not looking too bad. Now, looking into the assets minus liabilities, this one's interesting because in the past 5 years, they've never been negative, and they've been not consistently increasing, but it's consistent. Well, unfortunately, they had a small dip from 2 to 1 year ago, going from almost 3 billion to 2.89 billion. I mean, it's a small dip, but I just, the fact of the matter is also they had a very, very big jump by almost $1 billion from 3 to 2 years ago, going from 2.1 billion to almost 3 billion. So yeah, I'm going to ding that on a little bit right there. Average total assets ends up being $5.3 billion. Average liabilities is $2.4 billion. Doing this difference, we get $2.87 billion. I'm giving this one a 60%, mainly because of the big jumps that we have here. Looking at the shares outstanding, please remember that REITs always tend to issue shares. And in the past 5 years, they've increased this from 187.1 million shares to today of 224.6 million shares. There's an increase of 20%. Now, the thing with this is that they have increased shares from 5 to 4 to 3 years ago, but most of the shares that they increase mainly happened from 3 to 2 years ago. Probably COVID related, sure. Nonetheless, though, you know, that is still a pretty big increase. I'm gonna say it was COVID. Still though, it's just, you know, if they would just kept increasing it at the rate that they were going from 5 to 3 years ago, then I would be like, okay, I guess. Nonetheless though, I'm still giving this a 60%. I don't know. I'm just, that 1 year kind of messes with me. I do not like it, but I mean, it is what it is. 60%, I think it's fair. And lastly, when it comes to their total debts, we can see that they were continuously increasing this debt up until 2 years ago. However, ever since 2 years ago to 1 year ago / today, they came down from 3.3 billion to 3.1 billion. So that is still an increase in the 5 year of 78%. Now, looking at the overall grades, guys, we give them the income 85%, FFO 80%, AFFO 80%, assets minus liability 60%, shares outstanding of 60%, overall grade of 76%. I gotta say, not bad at all. The main issue that I have is mainly the big spikes. That's really it. And on top of that, when it comes to the shares outstanding, that slight increase, well, that wasn't slight, that one major increase from 3 to 2 years ago. But aside from that, guys, 76% still looking really, really solid. And now for what everybody wants to see, and that is the valuation. Current share price of $45.62. Taking a look at this in regards to their net asset value, this is taking their assets minus liabilities and then dividing that by the current shares outstanding. This gives us net asset value of $12.90. So based off of this, guys, this is telling me that unfortunately, this is very, very expensive still, right? Current share price of 45, net asset value is 13. Yeah, it's overvalued. However, let's take a look at now the price divided by FFO. This gives us 18.21. Now, comparing this to the 5-year average, so we take the current price, divide that by the average FFO, this gives us a ratio of 24.7. So right then and there, this is showing me that based off of the price divided by FFO, this is undervalued. Now, doing the same math in regards to the AFFO, this gives us a ratio of 17.84, and taking the average AFFO and doing the price divided by that, this gives us almost 24 as a ratio. So in these two scenarios regarding the FFO and the AFFO, it's telling me that it is undervalued. However, based off of the net asset value, it's telling me that it is overvalued. So based off of this, I would actually argue that this company is fairly undervalued, right? I'm looking at the FFO and the AFFO mainly because net asset value, unfortunately, because of the dilution of shares, right? It's a little bit, I guess, skewed, you could say. REITs tend to issue shares. It is what it is. So what more can you say? So the more shares that they issue, if their assets minus liabilities do not continue to grow at a much faster rate than the shares that they issue, then, you know, this number is going to be lower. When it comes to the price divided by FFO, I think that this kind of ratio serves as a better representation of what the company should be worth. And according to this numbers, this is looking like a buy. Obviously, this is not financial advice. Please do your own due diligence. Even though this kind of calculator doesn't have any form of assumptions, please still have it. It is available for everybody. The link is in the description below. It's called All Calculators Video. That link sends you to a video that shows you guys how to get all the calculators, how to input everything, etc, etc, etc. So please have them. It's all available for free. This is the reason why I also give out the earnings report. Link in the description below as well, because it's not financial advice. Every investment is the present value of all future cash flow. We all saw what just happened with Silicon Valley Bank. They just went under. It is officially bankrupt, completely bankrupt. So if we're invested in this company, yeah, this is why I highly suggest, please just do not follow what me or anybody on the internet is saying. You need to do your own due diligence, figure out what each company does, how they're allocating their money, where are they investing their money, etc, etc, etc. Because, you know, you would think that a bank like that wouldn't go under. Yeah, it did, right? Yeah, it did. So please be very, very careful when it comes to investing, because you can lose everything. So again, this is why not financial advice. I just have all of these calculators, guys, as a tool to help everybody, guide them when it comes to making that financial decisions. Aside from that, everything I say, please take it with a grain of salt. Do not follow what I am doing. So again, all of this is in the description below, as well as the earnings report. All we're asking for in return, guys, is just help us grow the channel, help us grow this business, because, well, we're nearing 2,200 subscribers. I never thought of that in my life. So, you know, the best way that you guys can help, you know, sure, you guys can donate money, and we really do appreciate that, by the way. I'm not saying I do not want your money. If you guys think that we're doing a pretty good job, and you want to give us money, I'm not going to say no to that. I am a capitalist after all. But the best way that you guys can help us is honestly just like, subscribe, comment, and share. That's really it. Stop by the live streams that we have, right? Like, I mean, we're gonna have now one on Tuesday for the CPI. Stop by, say hi, just chat with us. Well, you know, since we're not that big of a channel, we can actually interact a lot more with chat than somebody that's like big and the chat just flies, right? So please, the best way that you guys can help us is just that. Support the channel, watch, like, subscribe, comment, and of course, share. So thank you all so much for doing that. KL, you especially, Tony, and everybody else that does that as well. But again, that is the best way that you guys can help us grow. And now coming into this dividend, because 4% yield is massive. In fact, putting in $5,725, this nets us an annual dividend of almost $246 on the dot, guys. That's crazy. Almost. It's $245.98. But that's still a massive dividend. But please remember that when it comes to REITs, they do not offer you guys the same kind of tax bracket deal as other companies. You will get taxed at the normal rate for REIT companies. So it's looking good, right? $246 in annual dividends. But please remember that that is not a tax benefit kind of dividend. So yeah, just keep that in mind. Still though, it's looking really, really solid. And now coming into the option chains, first thing to note is that there really isn't a lot of liquidity here when it comes to the expiration dates: March, April, May, August, and December. Now looking at the March date, guys, we only have volume here for the strike of 45 on the put side, and only for the call side, the strike is only 50 that we have volume. Nonetheless though, we really do not have any kind of premiums for the call at the 50 strike. And on top of that, we only have $10 worth of premium on the put side for the 45 strike. Now coming into the April one, this one's actually a lot. Take a look at this. The put side, it is $170 for a strike of 45. I mean, the current share price right now is $45.62. That makes sense. However, for the call side, take a look at this. The premium, it is 50. So that's very, very interesting to see. Nonetheless, though, there really isn't much volume pretty much anywhere when it comes to this company. Only very, very close to that of the current share price. Nonetheless, though, again, if you guys still want to sell some puts or sell some calls, at least on the April 21st expiration, you do have a decent amount of premiums. All in all, when it comes to CubeSmart, thank you so much, KLL, for recommending this. Hopefully it didn't take too long to get to it. I know you mentioned in the comment section being like, I know it'll take forever for these to get, for you to get to mine. Hopefully I went through the recommendations rather quickly and I got to yours rather quickly. So I think from now on, I'm going to implement the idea that you asked for in getting like a random number generator and putting like a number on all the stocks that you guys recommend, and then being like, number generator, which one, boom, there you go. So I think that's what's going to happen, just so that way it's a little bit more fair, and the people that, well, at least not more fair, but at least random, and the people that recommend stuff wouldn't be waiting for too long, right? So I think that's the way we're going to move on when it comes to these stock recommendations. But nonetheless, hopefully this helped. And again, thank you so much for watching. You and a couple other people, Tony specifically, you are pretty much like top comment here. So again, thank you so much for the help, you and everybody that comment, subscribe, like, all that stuff. So again, thank you so much. That pretty much does it for this video. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out, and we'll see you all in the next stock analysis video as well as earnings report.